Welcome all to the Node, brought
All
to you
right.
by myself, Veteran Crypto, and David from DeFi University. How's it going, brother?
Doing great, Mike. I like that new music. I kind of
Dude,
do,
hats,
man.
hats off to DeFi Don. He hooked it up. So yeah, we got the new channel up. We got the Node YouTube thanks to the Blockchain Report and my boy Jeff over there. He donated his channel to bring it all together. So big shout out to him. And
Jeff, thank you,
yeah,
Jeff.
my name's Jeff. Love you, brother. Love you. So, yeah, no, everything's coming together nicely. We got big things planned. David's hard at work, and DeFi Don doing a bunch of programming stuff. Where, the website. Actually, you know what? I'll just bring that up real quick. So, if you want to follow us here on X, it's at the Node Channel. Appreciate any support that you guys give us there. And then right here is the new YouTube channel that we just stood up. So if you want to find us there, it's just at the node underscore channel. Had to put an underscore in there. Somebody already had the node channel. So we got our Discord, but let me actually bring up our official site, the node.pro. So this is what David's hard to work on. So he's starting to integrate to where our live stream will actually display here in the middle. The research links, as we're going through the morning news, I'll be dropping the news article links in here. So if we're ever talking about a topic that you want to go deeper on and you're interested in, then you can just go in here. You can click on it. You can read further if you want. We just don't have time to go in depth on every news story. And then over here in the live terminal, maybe you can tell them a little bit about what you're wanting to do over here, David.
Yeah. So, I really want to make that live terminal not just a place where you can chat with everyone across, YouTube and X and Kick and Twitch and Arena, but I'd also like to make it more of an interactive bot. And basically, the way I can do that is by wrapping these APIs at like CoinGecko and Dex Screener and DeFi Llama and maybe Coin Glass, et cetera, et cetera. There's a bunch of them. There's like maybe a dozen of them. I can wrap all of those APIs into the terminal so that you can chat with those APIs. And let's say that you want to talk to DeFi Llama about maybe you saw some new protocol and you're interested in that protocol. You want to learn a little bit more about it. Maybe you want to find out, hey, do these guys actually make any money? And if they do, do they return that?
Pesky little detail.
I know, right? It's so pesky, but sometimes it's important that these businesses actually make money. So let's say that, you're taking a look in the terminal. You want to ask about that new protocol that you found. You type it into the terminal. It's going to give you information, not just from DeFi Llama, but from the dozen other APIs that it has access to. So I think that'll be a really, really cool feature. I don't think that there's anything like it that exists right now. Everyone's got their own little proprietary chatbot, but it's not hooked up to 12 APIs. So that'll be pretty cool in the terminal. And then that live stream right in the center there, because we've got the new YouTube channel now, I can easily just, throw the video feed into that center panel there. And then on the left-hand panel, that's where, Mike, you'll be able to put in all of the sources. When we start going through the news in a couple of minutes here, you'll be able to put all of the sources there in that left-hand panel. I'm going to update the branding in the top left with the Node logo. And then in the top there, where you can see the Learning Center, you got a couple of things. You got, so the Learn Center right there, that's going to be updated, where all of the educational material is going to be available to everyone there. And so it's, Bitcoin Lightning Noster, it's DeFi High School, that's run by DeFi Don, it's DeFi University, that's my thing. And then also I'm going to put a bunch of options content in there because I've been trading options a lot recently. So I want to make sure that everyone has that educational material. And then Mike, it's the newsletter. So that newsletter is going to be integrated in there. So there's
there might be some cool. I'm working with you and Don, but there might be some. It might be a totally different newsletter than you might be used to. So we're working on using AI to where you can put in the tickers that you're interested in. We haven't pulled it off yet. We're getting close, but you can put in whatever stock tickers and crypto tickers that you're interested in, and it will generate a newsletter specifically for what you're interested in. So it will go through, it will scour the internet, it will scour everything, all the different APIs that David's talking about, and tell you what's going on with those projects, what hot news is that's going on, what the price action is, what's behind the price action, all that stuff. So it's going to be a fully customizable newsletter for what you're interested in. So it's not just here's Bitcoin, here's ETH, here's gold, here's silver. It's going to be whatever you want it to be. So it's going to be very, very sexy.
Yeah, it's going to be very cool.
So it's and then of course we'll have markets and then research. So David at DeFi University has a bunch of different research tools and things that he's built out for portfolio tracking, things like that. The way that he does his deep research, using AI tools, things of that nature. So all of this is going to be available here. And for the most part, all of it's going to be free. The newsletter is going to be $19.95 a month. We have some other offerings that are going to be paid, but for the most part, everything's going to be free. We're really big on having good quality free content here, but some of the more advanced stuff, we're trying to monetize. We're trying to make this a business. We're wanting to scale and grow. So we are going to have some things that are paid, but there's going to be plenty here for people that to get you started, get you making money. And then if you see the value there and you want to take it to the next level, then you pay for stuff. Not that you have to pay just to get in the door. So that's kind of our philosophy here. So yep, things are changing. I love it.
Yeah, it's going to be awesome, man. So, give me, because right now all I'm working on is getting OpenClaw set up so that I can automate, a bunch of processes that I don't want to have to do manual anymore. And so once I've got that done, and Mike, I set my OpenClaw agents up as Bob in accounting. So it's
actually a guy that shows up in our chat sometimes, Bob from accounting.
Yeah. So I set it all up to be Bob in accounting, and yeah, man, it's gonna be great. I'll be able to, just from my phone, hop on Telegram and go back and forth and control my own machine and get stuff done in real life through a Telegram bot. So very excited about that. Yeah, very, very much so.
So yeah, a lot of really cool, exciting stuff coming down the pipe. If you could, I do want to, can't express this enough, but definitely come to our new YouTube channel, again, at the node_channel after this week. This is the only place that we're going to be streaming to on YouTube. We'll be streaming to all the X's and all the other socials like the arena and stuff like that. But as far as YouTube, this is the only place that you're going to find this, this show and our suite of shows, because we're going to have DeFi Don starting, I think next week. I need to talk to Don about it, but I think next week we should be able to start up immediately after this show, Monday through Friday, 30-minute show, entry-level DeFi education that me and David used to host. DeFi Don, great guy, is going to be hosting it, moving forward. And then on certain days, I need to talk to Jeff about it, but he's going to do pre-records of the blockchain report. So basically early projects, like super early projects that haven't even had a token generation event yet. He'll be talking about those, whatever it is that they're, trying to build or do. So, a chance of finding, some of those early gems. Saturday nights, he does a DJ set and is going to start having guest DJs on, interviews and things like that. So music on Saturday nights. Don't know what we're going to call it. We jokingly call it Saturday Night Fever. And then we're talking to Jay and Ellie about doing a stream on Sunday that is for gaming. And then, of course, Thursday, our very popular The Red Pill, Thursday night at 6 p.m. Pacific, where we talk about everything you're not supposed to talk about while we get drunk. And it's pure comedy. So definitely stay tuned. We got, you can see them all here. You got the Node. Here's the times. Crypto and Chill, Tuesdays and Fridays. DeFi High with DeFi Don. Blockchain Report, The Red Pill, and Saturday Night Fever. So all the channels are here, and it's a one-stop shop. So let's go ahead and jump into the news. So we're going to get into the habit of just putting our finger on the pulse of what's going on in the RWA market. So this is RWA.xyz. No secrets here. This is what I look at every morning. I want to know what's going on in RWAs. Is it growing? Is it contracting? Is there money flowing in, TVL growing, or is there money flowing out? Money being sucked out of RWAs, and you can see pretty much since its inception that it's been it's slowly built, but it's just gaining momentum. So those that don't know, this is the tokenization of real world assets, RWAs. You can see U.S. Treasury debt currently is the market share, followed by commodities, gold, silver, oil, things like that. We'll be talking about oil prices here in a minute. Private credit, institutional alternative funds, corporate bonds, non-U.S. government debt, and public equity. And then you have things like real estate, stocks, all these different things. Anything that historically has been illiquid is being made liquid through tokenization. So it allows a lot more flexibility when it comes to transferring ownership, borrowing against those assets, all of those different things. It's the new era of finance. TradFi is modernizing using DeFi and blockchain technology.
Something that kind of sucks about this though, Mike, is that a lot of these products, like regular retail investors, don't have access to.
Yeah.
So like most of these, like all that toxic sludge, or excuse me, U.S. Treasury debt that you see there, so like all that stuff, like most retail can't trade that. You can't, even from your DeFi wallet, you can't buy many of these tokens simply because they're either for accredited investors only, or the minimums are like between $100,000 and $2 million.
Yeah.
So like, even though these things are coming on to digital rails, it's not like access is really being democratized yet. I mean, there are a handful of US Treasury products that retail can swap into, but they've got crazy fees, or, they're like gated in some way. So there's only two of them. There's like, I think Open Eden has one, and then Circle has one. And there might be a third one, but like the fees and the gating, it kind of ruins the experience. If you really want to be able to earn the 4 or 5% by just keeping your cash in tokenized treasuries or short-term bills or something like that, you've got very, very few options on DeFi rails right now. But that's better than zero options, which is what it was just like 2 years ago. So
Absolutely.
things have grown exponentially. What I'm really interested in, though, is not just tokenizing treasuries and gold and stuff like that. I'm interested in tokenizing like real estate or vehicles, where the deed to a house or the title to a car becomes an NFT. Like
real estate, that's the big one that I'm excited about, because I could easily take out a loan against property that I own, right? Because I own a couple of properties, and I would love to be able to take out some of that liquidity, just a small bit, maybe $5,000, $10,000, just to do like a home improvement, because I can use DeFi instead of going to a bank and taking out a HELOC, a home equity line of credit, and having like a 7% interest rate.
Right.
I can use DeFi. I can borrow borrow some money at a much lower rate, and then I can leverage that into investments where I can earn more than in a yield than I'm paying in interest on the loan, and almost game the system to where I can make money off of the loan.
But it's so much better than that.
It's not a taxable event as well.
Well, yeah, but the HELOC, like, who's going to take out a $5,000 HELOC, man? Like, you can't even do that, really. Like, think about all the fees the banks must charge. They're not going to talk to you for $5,000. But if you actually custody your assets, meaning the NFT, the deed to your house is an NFT, and you've got that NFT in your hardware wallet in your safe, all of a sudden you actually custody that asset. And so now if you take that NFT, you throw it on a money market like Aave, you can borrow $100 against your house if you wanted to.
Yeah.
Yeah.
Well, and the cool thing about it is that title fraud it has been a thing forever, where somebody can walk into the the name of it's
Like
eluding me.
a court somewhere.
Well, not even a court. They can just walk into the county records,
Oh,
and
like
they
a
can
clerk.
they can do
Yeah.
a quick claim deed saying that they bought your property. They have to process it by law, and there's a bunch of people, especially elderly people, that will all of a sudden start getting notices that they're over 90 days late on a mortgage that they never took out, and all of a sudden they're getting evicted from their home that they paid off like years ago because somebody stole the ownership and took out maxed out the loans they could take on it, and then took off with the money. And so
Wow.
these old people are sitting there, or just people in general, saying, "I never took out a loan. I've had this paid off for decades," and they have to fight it in court, and a lot of them lose. And
That's
so
crazy.
that's why I'm really excited about it. Is there's a lot of upside and no downside to it.
Yeah, I'm excited for like just being able to borrow against real world assets and all
Mhm.
the financial engineering that you can do with that. Just being able to tokenize something and borrow against it, all of a
Yeah.
sudden there's a lot of really cool stuff that opens up. Um, but yeah, man, another thing is imagine being able to do this on Bitcoin, on Lightning, where
Yes.
instead of denominating your property in dollars, you start denominating your property in satoshis. That's the thing, man.
Yeah.
That's the thing. Yeah.
Well, yeah, and I mean, yeah. What we can go down that road forever, but um,
Yeah.
DeFi Llama. So this is another one that I look at every morning. This is to put my finger on the pulse of what's going on in the markets. The other one was RWAs, the tokenization of real world assets. This one is for decentralized finance. Aerodrome, Uniswap, Aave, Morpho. All these places that we're talking about that DeFi Don is going to be teaching in DeFi High, and that David teaches about in DeFi University. This is the entire market. It gives you a snapshot of the entire market, and then of course you can drill in and get very a lot more nuanced. By chain, by protocol. If you just want to look at Uniswap, if you just want to look at Aerodrome, see what's going on with them, because part of doing your own research and doing your due diligence before investing in any of these chains or any of the protocols that I just mentioned is looking at their revenue, because we're moving from a speculative market that has been driven by emotional retail, where just whatever the narrative is or whatever's being hyped on social media is what everybody piled into and FOMOed into, to a utility institutional driven market where they only care about profits. They don't care about what's being hyped. They don't care about what ifs. They care about what is making money. And
Yeah.
so you need to see where money's being generated, where fees are being generated. You also need to understand the tokenomics of these tokens that you're buying. Is there a mechanism in play? And I'm going to keep saying this. I say it all the time, but it's so important. David taught me this.
I
So
taught you something.
you learned me something.
I
You,
leered you the good things.
you leered me. So you need to understand the tokenomics of these tokens and understand that, okay, the project or the chain generates fees. That's great. How are those fees shared with token holders, if at all? There's a lot of projects out there that are very successful, that there is nothing in place that you as a token holder, where that revenue or those fees are shared with you. And you need to understand that very important fact, because if there isn't something in place, then you're basically buying a baseball card or a football jersey or a meme coin that you're just
Yeah.
hoping that other people buy it to drive the price up. It doesn't matter how successful
Yeah.
the company is.
And even if there is some type of value accrual mechanism for the token holders, it might not be enough. Like Hyperliquid with its hype token is a great example of this. That Hyperliquid has a mechanism by which those trading fees,
Hmm.
all the revenue that's generated, much of it gets returned to token holders.
Yeah.
But even that, if Bitcoin dumps, is not going to be enough to keep hype above like $20, or maybe it even moves to $10. So these are, at the end of the day, these are high volatility tokenized different types of assets. But if you take a look at pump.fund down there, Mike, you see that on
Yeah.
protocol rankings, number 5. How
Yeah.
much? So tell me, can you, because I can barely read this right here. So pump.fund, how much did these guys make in? Oh, great. Look at that, dude. So pump.fund, you've got to be kidding me. $2.7 million dollars in the last 24 hours? Bro,
It's because of meme coins.
what the fuck?
People are, that want to get rich quick end up losing all their money. Most people. You need to understand these meme coins. For every person that gets rich off a meme coin, there's thousands, if not tens of thousands, that lost everything.
Man,
Do If you invest in meme coins, treat it like a lottery ticket. Put in $10, $50, maybe. Do
don't put in
not
any. Don't put
do
in
not
any.
that's my stance. But if you have
Yeah.
that itch that you need to scratch to gamble, just do very small amounts. Do not listen to social media hype that it's gonna go to $1 million and you're gonna freaking get rich overnight. Just do not play that game. You
So
need to be smart.
yeah, Mike, I'm looking at this here. So, I haven't actually looked at, the fees generated by these protocols ranked like this. But,
Yeah,
Tether and Circle, that makes a ton of sense.
yeah.
The fees that they generate simply because they're by law not allowed to pay yield to holders of their minted stables.
Yes.
Hyperliquid makes a lot of sense because, it's a casino and most traders lose. Aave makes a lot of sense because it's a money market, and so they charge a spread, and they're the biggest money market. They've got $30 billion in TVL, and they make a spread on every dollar. But dude, and Uniswap makes sense because it's the largest decentralized exchange. Jupiter also makes sense because it's one of the largest, if not the largest, DEX on Solana. Lido number 8, that makes sense because of all the LRT rewards yield. But pump.fund, dude, what the hell is that doing in the number in the within the top 10? Like,
Meme
because
coins,
I thought
Solana,
that stuff was dead, like, oh, that's not
dude.
good.
It's like meme coins are like zombies, dude. They just don't die. They don't go away because there's
Mm-mm.
just, I mean, the sheer volume of them that's out there. And for every one that dies, 10 pop its head up. It's like a hydra. You
So you
chop the head
said,
off of one.
well, it's the pump token, pump USDT, is that it?
I
Yeah,
think so. Yeah.
yeah, that is it. So I mean, it's done basically nothing but go down. So yeah, it's trading for 2/10 of a penny. I mean, yeah, man, but like people need to just like run in the opposite direction from meme coins. Look, no one becomes a millionaire overnight. That doesn't happen. It's happened to 10 people. And then there's 10 other people on Twitter who lie about it. You know,
Oh,
so
there's a lot more people that lie about it.
yeah,
Trying to shill their program or whatever it is that they're freaking shilling.
yeah, I think that people should stay far, far away from stuff like pump.fun. Look, if you want to be a legitimate DeFi operator, then learn all of the other protocols on that list. Learn how
Investing.
to trade them. Yeah,
Yeah.
exactly. Build a skill set.
Yeah.
Learn about Aave, learn about Uniswap, learn about Hyperliquid, maybe even learn about Jupiter, and then you can learn about LRTs on Lido. But
Well, and it doesn't
pump.fun,
even have to be that complicated. I mean, you definitely want to learn that stuff, but I mean, if you're just looking to get started, just learn how to put some liquidity on Aave and lend it out, and earn 5-10%. Learn how to just use some of these DeFi protocols. I mean, hell, I mean, I'm not saying do it, but just even keeping USDC on Coinbase, you earn like 5%. I mean, there's a lot of really easy ways that you don't need to be that knowledgeable that you can earn yield. And it's a great way to dip your toe in, wet your whistle and, kind of, start the addiction, start the
Yeah,
DeFi addiction,
yeah,
because
it's kind
the
of an
first one's
obsession.
free. The first
Yeah.
one's free. You gotta,
Oh,
you
great, great.
you know, once you're
Uh,
hooked, you're hooked.
oh man, then you're hooked. Yeah, let's
Yeah,
let's check out some news, Mike. What's going on in
absolutely.
news?
Absolutely. All right. So let's see. Let's actually bring this up. All right. So today, let's start it out with Bitcoin. So Bitcoin balances on exchanges reach all-time low as MicroStrategy achieves 1.2% of BTC yield to date with a again, large gain. So Bitcoin balances on crypto exchanges hit all-time low amid reduced available supply and rising demand. MicroStrategy achieved a year-to-date. They recently acquired almost 18,000 Bitcoin for almost $1.3 billion, increasing their total holdings to 738,731 Bitcoin, or 3.5% of Bitcoin supply. That's huge.
Yeah, so here's something that I think about a lot whenever, we see stuff like what you just mentioned about supply, demand, imbalance, stuff like that.
Mhm.
Oh, whoops. I want to see if I am I sharing the right screen here. I'm really
Oh,
just
yeah.
looking for just
There
the
you
trading view screen. Awesome. There we go. So here's the thing. When I see BTC perking up here and pushing just a little bit higher during the regular session today, up 4.5%. That's a great day. We've had a couple days in a row pushing higher, but here's the thing. We need to zoom out. And whenever you hear, news about all this, demand for Bitcoin and, lowest supply available on exchanges, to me, I think to myself, well, where is the selling pressure coming from? Because I do believe that there is on Binance alone, I'm pretty sure it's like every single day that there's like 7,000 BTC on offer on Binance every single day. So, if that's the case, then there could be all the demand in the world from the sailors and MicroStrategy and other buyers. But if there's more for sale than people want to buy, number go down. So having there be less BTC on exchanges, I'm sure that's a good thing in the long run. But the problem for me, Mike, is that there is a Bitcoin cycle. I don't know why exactly there is. All I
go.
know is that there is. And so when I take a look, I like to zoom out on BTC first and foremost before I do anything else. And
Mhm.
so I zoom out to a weekly chart. And when I take a look at this weekly, I notice, okay, the all time high up here at 126, we got the drawdown to 60K. So clearly in a Bitcoin bear market. But here's the problem, we haven't seen any capitulation yet. And usually, and according to Benjamin Cowan, and look, he has been by far the best Bitcoin cycle analyst this entire Bitcoin cycle. And what he's been saying is that we are solidly in a bear market, a Bitcoin bear market. And during Bitcoin bears, you get a test or a break of the 200-week moving average. And the amount of time that these bear markets last is usually about 12 months. So that means, where do you measure the start of the bear? Well, I measure it right here when that 50-week moving average broke. That
Okay.
was the start of the bear. So that was like the beginning of November. So if a Bitcoin bear market lasts for around 12 months, well, then look, I marked November this year right here with a vertical line. So there's a couple of things here. Number one, we haven't seen a test or a break. We got a little bit of a test a couple of weeks ago at 60K, but we haven't seen a break of the 200-week moving average. And it's not November. So we've got a lot of time left. So
Well,
those
well,
two
let me
things.
ask you this, because this market, with all the institutional adoption, do you feel like that might boost the Bitcoin price to where we won't see it break below like it has historically that 200-week moving average? I mean, do you
No,
no? Okay.
no, I don't. And here's why. I think that, all of that institutional narrative is just that, a narrative. I
Okay.
think that it is something that humans like to ascribe price action to. We like to say, oh, well, because of Bitcoin ETFs, price did this.
Hmm.
And, maybe to a certain extent, I guess that can be true sometimes, but I really think that price moves first. And then people say, oh, this is why price moved.
Hmm.
So, the institutional narrative, the RWA narrative, whatever the narrative is, I think what matters more than that is that there is some type of repeating cycle in Bitcoin. I can't exactly tell you why there's a cycle.
Hmm.
All I know is that there is one. And so I think that's what matters most. And what that cycle tells us is that we should be in a period where we get a bounce in March of the midterm year.
All
So
right.
we're in the midterm year. It is March. We should be getting a bounce right now. We are getting a bounce. And what should happen at the end of this month and into next month is the sell off continues. And so, what
Well,
I,
that's going to be an interesting time because that's when the midterms are here in the U.S.
yeah, well, I mean, so we're going to have, Bitcoin selling off. I think that we will have found a Bitcoin trough by the midterms. So
Hmm.
that's my expectation here. What I see is a bear flag. I see Bitcoin putting in bear flag one, bear flag two, and my expectation here is that over the next 2 weeks, Bitcoin will find some type of a lower high. So here we go. We've got the all-time high.
Hmm.
We've got a lower high. And as Bitcoin bounces, I expect that it will put in a third lower high. And so that will complete the bear flag. And then we'll get that next leg down to 49K. That's my next target on the downside. Break of the 200-week moving average, move to 49K.
All right.
And here's the thing. What happens if the stock market actually starts to correct over the next couple of weeks at the same time that Bitcoin puts in a lower high? Well, taking a look at the stock market, this is a weekly, it's been very resilient in the face of this war in the Middle East. So resilient stock market, but you know what? Private credit, not so resilient. So there are plenty of different reasons why the stock market could correct. And look, a correction is normal and healthy. But if it takes place in a midterm year when we're in a Bitcoin bear market, I would expect that could give Bitcoin the juice it needs to get down below 49K and really get down into the 30s. And
Gotcha.
that's where you want to be a big buyer, man, because I think that would probably be like the ultimate low if it were to get down there. I would love to be able to buy Bitcoin for 35K. That'd be amazing.
Oh, absolutely,
Yeah.
absolutely. All right,
Yeah.
let's keep cruising because I definitely want to get into the charts. As soon as we're done with the news. So this is some of what I found today on my own, just kind of going through X. We got the CEO of ProCap Financial, Jeff Park, to speak at Bitcoin 2026. And this is a quote. And I wanted to get your input on this, David, because to be honest, I don't understand what he's saying. The next era is fragmentation, capital controls, and weaponized liquidity. When access tightens, Bitcoin offers an exit. I don't understand that. What does that mean?
Yeah. So I'm sure what he's referring to is, there are a lot of countries that are kind of gating their citizens' ability to use fiat to
Mhm.
buy any asset, but especially digital assets.
Mhm.
So, like capital flight. So, if you're in, why don't we find out what happened in? I think Mike, something happened in Europe where they like limited the amount of crypto you can hold or buy or something.
Huh.
Um, I think that's what he's getting at. Like for example, I know that in China, isn't like owning Bitcoin like illegal in China? And
It depends on the day. It seems like
yeah,
every time I hear about that, it's like Bitcoin mining is illegal. Okay, now it's legal. Okay, you can't own crypto. Okay, now you can own crypto.
Yeah, so I'm just asking Gemini right now, are there capital controls in Europe for citizens to buy or hold digital assets like Bitcoin or stable coins? I'm pretty sure that because Europe is basically communist now. So like I think that they've enacted some like regulatory nonsense. That
Draconian control.
yeah, yeah, basically. So check this out, dude. This is nuts. So the UK. So here we go. The EU is highly regulated, and they put together this MICA regulatory landscape.
I remember that.
Yeah, and so something about what the UK did. So I'm going to say, tell me more about the crypto and digital asset laws in the UK. The UK. Let's see what's going on over here in the UK, because I'm pretty sure that they like gated, I guess you could say, the amount of stable coins that a citizen can hold.
Well, and I want to point this out really quick. We try to be very transparent about how we go about doing our research. David's very successful in DeFi and investing. He came from a TradFi background, and it's important to do your own research. Don't just believe what we say. Don't just believe what anybody says. Always do your own research. But we like to teach people how we do our research, how we do our investing. We're here to educate you, not spoon feed you or make you dependent on, listening to us for advice or whatever. You need to learn how to do this yourself, so that when you hear us or somebody else talking about a project, legislation, whatever, you can do your own research and make sure that that we're not freaking blowing smoke up your ass.
I
So
like
go ahead.
blowing smoke. Blowing smoke is good. But
Depends
check
on.
this out, though. Check this out, though, Mike. Dude, what type of bullshit is this? The $20,000 or pound stablecoin limit? So this is for the UK, okay?
Yeah.
And the UK has more arrests for speech than in Soviet Russia, okay?
Oh yeah.
Like the UK has really,
Oh
really
yeah. People
lost
going
its
to
way.
jail for months or years for social media posts.
Oh, it's insanity, man. And look at what they did financial wise. So, the most significant soft capital control in the UK concerns quote unquote systemic stablecoins or stablecoins used for payments. Right. Because if they can't track your payments, then they can't tax you. So, it's about just stealing your money. They want
Yeah.
to be able to tax. So, retail holding limit, the Bank of England and the FCA have proposed a £20,000 limit on the amount of any single quote unquote systemic stablecoin an individual can hold in their wallet. Oh, well, so you're going to tell me that I can't custody my own assets? That's what
Well,
you're going to tell me.
it's a similar thing that's happening here in the U.S. I mean, that's what's holding up the Clarity Act is the banks. They don't want us to be able to earn yield on our stable coins, on our liquidity. So they're holding up legislation, hoping, I think, and somebody in the chat yesterday brought it up. It's They're trying to hold it up until the midterms, hoping that Democrats take control, because statistically there's Democrats are very anti-crypto,
Check this
because
out.
a
Look
lot
at
a
what
lot
it
of
says, Mike.
a lot of their giveaway programs are based off of taxes, stealing
Yeah,
our money to pay for them.
that's
So,
exactly what it is. I heard that guy Ro Khanna on the Sean Ryan show talking about it's only 1% more. Just pay your fair share. It's only 1% more, and it's like, dude,
I
like
hate that
our
fair share.
country. I hate that shit. Our country was founded because of a two
A tea
percent tax
tax.
on tea. Like, and yet somehow now people are okay with just getting bent over for 30 or 40 or 50% of what they make each year.
Yeah.
Like, dude, it makes no sense to me. So you work 6 months out of the year for the government? Like, no way, man.
What are you getting for that?
You're getting nothing. You're getting nothing. You're getting streets that are not safe. You're
Yeah.
getting, infrastructure that is crumbling. You're getting
Yeah.
energy that is extremely expensive. You're getting food that is toxic for you. It
Yeah.
just doesn't make sense, man. But take a
Yeah.
look at the goal. This so-called goal of
Yeah.
the £20,000 cap in the UK. It says this is designed to prevent bank runs. where people move all their money from traditional bank accounts into digital ones too quickly, which could, like, give me a break. This is such nonsense. They just want to control people. But notice the businesses that can actually advocate for themselves have a much higher cap, which isn't even high enough for a business. So 10 million pounds, much higher, but not high enough for most businesses that aren't very small. So even for businesses, they're trying to gate this. Man, this is just, an example of horrible draconian policy that you would expect from a communist dictatorship, not a republic or a democratic republic. So yeah, it's a real shame that Europe has fallen like this. Real
Yeah.
shame. Yeah.
All right. So next up, we got Canton Network. Tokenized gold infrastructure is coming to Canton. AUROX is integrating with the network to bring compliant, privacy-enabled workflows for digital gold backed by physical custody. This is important. You want to make sure that these digital assets are backed by something physical. Expanding institutional infrastructure for tokenized commodities. I'm a big bull on Canton. I won't shill it any more than that. Do your own research, but they're definitely doing some big things.
Yeah. So you
Peter
said it's
Maluk,
called Aurochs, right? Aurochs?
yes, AUROX.
Got it.
Peter Maluk looks like CEO of CPI Wealth, financial advisor. So, contrary to what you hear all over social media, over 80% of millionaires started out poor or middle class. How did most of them break through? No, it's not day trading, market timing, or speculation. They got there by saving part of every paycheck in their 401k. Start today, no matter how small the amount. I can't stress this enough. Everybody has to start somewhere. It's if it's $100, if it's $200, slow and steady wins the race when it comes to building wealth. If you try to use meme coins to get rich, if you can get rich quick, you can get poor quick. Slow and steady, very methodical, very well researched, and you need to invest in yourself on how to do it properly. That is how you build wealth over time. And then
Yeah.
compounding, using compounding yield and a lot of these tools that we teach, that David teaches in DeFi High or DeFi University. That is the key. Anything you want to add to that, Dave?
Yeah, I do. So, I think that the process of generating wealth after COVID is much, much more difficult, if not impossible, because
You're doing
our money is much more broken now.
Yeah.
So if you're trying to save in US dollar terms, dude, there are very, very few ways to actually get ahead and be able to earn
Because
more
you have to
buying
outpace
power.
inflation.
Right. Right. Yeah. So I mean, if you're holding dollars, right, and you buy the S&P, and the S&P has a great year, which is 15%. Well,
Mm,
congratulations, you made maybe a couple points on your money,
yeah.
maybe if you're lucky. So you basically are forced to invest your dollars into real estate or into gold or into Bitcoin or into something, the S&P, the NASDAQ. Um, because if you just hold dollars in a bank account earning treasury type yields, your purchasing power erodes. And depending on what happens with the monetary regime, it could erode quickly or more quickly. So, I mean, during COVID, man, that money printing operation, you saw massive, massive inflation and you saw price inflation. So it's not
Mm.
just the rate of inflation, it was also the absolute price inflation. And that's why it bothers me so much when I hear these central bankers talking about, oh, well, inflation is moving down towards our target of 2%. It's currently sitting at, 2 point something percent. But that completely misses the fact that prices inflated and did not come back down. So
Yes.
that price inflation never went away. It continues. It's just that now it's continuing by a smaller percentage amount each year.
Mhm.
So, yeah, man, like that inflation really ruins regular people who don't own hard assets.
I mean, yeah, I mean, just look over the past couple, since COVID. I mean, look at grocery prices. I mean, I know that what I used to buy for under $100 being a single guy for a week, now it's costing me 180, $200.
Right.
Same shit.
Right.
I'm buying the same stuff, and I mean, a lot of times I'm actually kind of, where I didn't used to look at prices as much. Now I'm actually paying attention to prices. I'm still almost paying almost double. So,
Yeah.
all right. We got Lark Davis says that 15 billion. That's how much the Treasury is buying back in short-term debt today. That's a lot of liquidity hitting the short end. I'm gonna kick this to you, David.
Yeah. So basically, Besant is rolling a lot of short-term bills, and so his predecessor, Treasury Secretary Janet Yellen, during the COVID years, used the very front of the yield curve to
Mhm.
issue cheaper debt to fund all of those COVID programs and to fund the government. So it was much cheaper to issue short-term debt than it was to issue long-term paper. So
Okay.
if you're the Treasury, your job is to sell US government debt. And if you sell that debt at a 30-year duration, then you might have to pay 5% to creditors. But if you sell that debt at the very front of the yield curve at 1 year or 2 years or 5 years or something like that, then you pay to your creditors a lower rate of return, a lower yield. So it makes a lot more sense if you're the Treasury and you really want to fund the government and pay the least amount to do it, that you issue short term debt. The problem with that is all this debt got issued and then rates had to go straight up because of all the inflation that was created as the money supply expanded. So, as rates were forced to go straight up, the Fed was essentially pushing the borrowing costs of the federal government up. So the Federal Reserve, as it raised rates, was pushing up the borrowing costs against the federal government. And these are two different institutions. Like
Yeah.
the Federal Reserve is an unconstitutional fourth branch of government. And the federal government, that's the Fed. That's what we think of as the legislative, judicial, and executive, right?
Yeah.
That's the federal government. But
Yeah.
the Federal Reserve is a banking cartel, not owned by the federal government.
Yeah. It's
So
a private institution.
it's a private institution. And so when the Federal Reserve jacked up interest rates, all of a sudden, all of those short term bills that were used to fund the government during the COVID years, the rates of return that creditors were now earning on those are much, much higher. And
Yeah.
so now it's Besant's job to roll that stuff. He's got to roll it into new short duration bills. And he's doing that, it looks like, by this program of buybacks. And he's using, they've got a couple of vehicles that they're using to do this. One of them is that Cayman whale that I put together a ton of research on in the school community.
Mhm.
Basically, it's like a conglomerate of like 6 hedge funds in
Okay.
the Cayman Islands, and their size is like $1.5 trillion. And
Mhm.
they're price agnostic and they're buyers of US Treasury bills and bonds because they're running a levered interest rate arbitrage on that.
Okay.
So, so they're one of the buyers. They don't care about price because they immediately sell futures against the Treasury. So they're delta neutral.
Mhm.
But what Besant is doing is he's just rolling. He's rolling. And so I'm not quite sure how this is US dollar liquidity positive, but a lot of people say that it is. And so I think that's what Lark Davis is getting at here.
Okay. All
Yeah.
right. All right. Next up, Watcher Guru. Great account to follow. Just in, Elon Musk says X money, early public access to launch next month. Pretty cut and dry. Elon Musk, on Twitter, now X, he's been wanting to make it, basically not a bank, but he's been wanting to integrate payments and things like that and crypto, onto X. And it looks like that their beta, or their public access is going to launch next month. Actually, super excited about this
Me
because
too.
being content creators, I would love to be able to, once we're monetized on X, be able to get paid in crypto. I know me and David are very aligned on, as much as possible, any monetization that we do here, we're wanting to, take that in crypto, in Bitcoin and things like that, because we want to decouple from the dollar. Because for all the
Um,
reasons that David has been stating, since the beginning of the show and pretty much on every show, I just become more and more convicted to get out of the U.S. dollar just because of inflation and out of control printing.
yeah.
You don't see that with Bitcoin. There can only ever be 21 million Bitcoin, no matter what. Nobody can change that. So there is no printing of more Bitcoin. There is a finite amount.
So, but
So
Mike, you remember we were talking the other day about how the process of lending Bitcoin multiple times, that rehypothecation of the same one BTC through multiple lend borrows
like
can
paper Bitcoin.
yeah,
Yeah.
can essentially create paper Bitcoin. Yeah, man. So I think that's definitely real. But if you go back up to why did they pick an image of Musk where he's got a frown, man? Why couldn't it have been him smiling
Well,
or something?
that's his resting face. That's his
That's
resting
his,
bitch
that's
face.
his resting face. Yeah, man. I mean,
He always kind
dude,
of has. He always kind of has that look.
dude,
I love Elon Musk. I
dude,
think
it's
he's one of the
great.
best things that's fucking ever happened to
Yeah,
America.
he's great, bro. And X Money's gonna be awesome. It
Yeah,
really is. So, and he's got all the experience with it. He called his first like online bank. It was called X.com, right?
yeah. He sold that to
And they
PayPal.
merged. I think they merged together.
I think with
Yeah.
PayPal. Yeah.
Yeah. I think that he was running something where he had a bunch of users, but
Mhm.
he couldn't fund all the user growth for much longer. He merged with PayPal and ended up, just naming it PayPal. But I
Well,
think
I mean,
X Money
that's
is
how
going
he
to be great.
initially made a bunch of his money, and and like was basically sleeping on a friend's couch and put all of the money into Tesla and all the other stuff that he's done. Um, but yeah, Elon Musk, such an interesting dude, and it just cracks me up that anybody could hate the guy. I mean, SpaceX, he's trying to get humans, to Mars, and just the technology that he's come out with like Starlink, giving internet to the
Right.
freaking world. Um,
Exactly.
X, he basically saved freedom of speech.
Right.
The guy is, yeah. I can't say
He's
enough.
dude, he's a
Yeah,
massive force for good, a
yeah,
massive force for good.
yeah.
And I think that, people who dislike him, just,
Purely political. Purely political.
yeah, it
Because
seems
he came back.
partisan, man. It
Because he
really
came
seems
back.
partisan.
That's
Yeah, he's a good dude, man.
what. Oh yeah, DeFi Don says down there in Florida that they did a SpaceX launch last night. He walked out to the road and he could see it. That's
That's
such a
super
cool
cool.
thing. I can't stress enough. Just I mean, it goes to show you that these private companies where they're forced to be profitable find better ways to get things done than the government. I mean, look at NASA. Not taking anything away from them, they've done great things, but they've stagnated. The innovation stagnated. They don't know. They're a government organization. They don't know how to run because they don't have to turn a profit. They just say we need more money, and hopefully the government gives it to them. A SpaceX has to turn a profit. They're a private company. They have stockholders. So next up, Dune. BNB chain leads all blockchains in monthly unique stablecoin senders. I did not know this. 15.1 million in February alone. When it comes to everyday stablecoin activity like trading, payments, and remittances, BNB chain is where most users are. So it's more than Tron, and more than Ethereum, more than Solana, more than Base. I hate to say it because I am not a fan of anything Binance, but you can't, the data. You can't
Well,
ignore the data.
but maybe there's more to it than the headline figure,
Please,
So
please drill in. Please drill
yeah,
in.
so I could think of a couple of different ways, So here it says unique stablecoin senders. So monthly,
That's an important distinction. Sender.
monthly unique stablecoin senders, but that doesn't say anything about notional. It's just the number of senders. Does that, you see, here's the challenge. How do you know that that is equivalent to one individual? Like, is one sender equal to one individual,
Hmm.
or no? I don't know. Um, I think that there are all sorts of different proxies for individual users on these different chains. For a while there on Solana,
Where
people
where
were.
would be a good place for us to look? Just to show the viewers, like maybe a place to look for this kind of data.
Yeah, the first thing that I would do is I would probably just talk to Gemini about it real quick. And then I might ask it, like, hey, where should we look to find out more about daily or monthly unique stablecoin senders? So I think that's what I can do. I want to learn more about whether monthly unique stablecoin senders on a chain is a good proxy for unique individuals or not. That's kind of what I want to know. Like, does a unique monthly sender equate to an individual? And so it's saying that monthly unique stablecoin senders is a directional indicator, but a poor proxy for actual unique individuals.
There you go.
Um, so it says, why? Why is it a poor proxy? Well, it says the metric is frequently inflated by inorganic activity. There we go. So if a chain shows 1 million unique senders, the actual number of humans is often 10% to 20% of that. So
Ah,
there's right? So there's Sybil activity, which is airdrop farming. There's smart contract interactions, which can generate a lot of unique senders, which are actually middleman contracts. There's burner wallet culture. Sophisticated DeFi users create new clean addresses for every transaction to maintain privacy. There's, so there's also the exchange black box. Millions of people trade stablecoins inside centralized exchanges like Binance or Coinbase. And these
that's what I was
transactions,
wondering if maybe part of that is has to do with Binance, the platform, and just the sheer size of that would
and I think that it is. I think that this is just another example of why
propaganda.
you can't trust
It's
anything.
Binance propaganda.
It's what it is, man. I think that's really what it is, Mike. I think it's just I think it's inflated. Just like in 2024, when people were talking about, the unique addresses on Solana being a
Yeah,
proxy for users, when really it was just, meme coin scammers creating,
yeah,
spinning up 100 addresses at once.
yeah.
So yeah, man, I think it's another example of that.
Well, and that's why I picked that news article is because I kind of it was a little bit of a bait. I wanted to
Yeah,
well I wanted to show that you can't just take some of these posts at face value. You really have to read what it says, and you really have to do your own research and fully understand what it is they're trying to say. Because a lot of people would breeze past this and be they might look at that and be like, oh shit, maybe I should buy some BNB.
right. But
Because
also, Mike, you see that second sentence there. So the first
yeah,
one is just stating a fact. Okay,
yeah,
that's a piece of data. That's a fact. Great. But that second sentence is like a conclusion that you don't have data from that fact to be able to draw. Like
exactly.
15 million in Feb does not mean BNB chain is where most users are. It's
Exactly.
super misleading. Yeah.
Exactly. And that's
Yeah.
like I said, I wanted to use this as an example of why you really need to be critical of everything that you see, especially these days. It's attention to detail.
Yeah,
So
man. So what did Jim Rohn used to say? Stand guard at the doorway of your mind. You
yeah,
know, always.
careful what you let in because yeah, if you let a bunch of trash in, you're gonna get trash out.
That's
So
right.
digital asset. This is the company that built Canton Network. Just so you know. Make sure I'm following them. Yes. Privacy is not optional. Infrastructure for finance. This is where I believe he's a CEO and co-founder, discusses why on-chain privacy, institutional control, and synchronized execution are prerequisites for moving real-world assets at scale. You want to? Should I play this? It's like a minute and a half.
Yeah, I'm interested.
All right.
But the key differentiator really for people is privacy. I still can't believe after a decade of doing this that has been an afterthought. But going back to the chat rooms in the early days with Satoshi, everyone would always be like, this isn't really achievable without privacy. So the transparency's always been a bug. And yet everybody has replicated that design feature. I get it. It's very hard to design for privacy, but that's really one of the leading differentiators.
Today, I'm joined by someone who spent the last decade building that very bridge.
Eric Saraniecki is a leading provider of smart contract technology for financial institutions and one of the architects behind the Canton Network, the only public blockchain with on-chain privacy, built to move real-world assets at institutional-grade scale, connecting traditional finance and crypto.
So privacy is this complex, overlapping, asymmetric set of views. When I go to my doctor and I pay for the doctor, I don't want him to find out how much money I have in my bank account. I don't want the bank to know why I went to the doctor. So it's not just at rest or in a simple transfer. It's in composition with other stuff. Who can see what, under what conditions?
Bank shouldn't know that you went to a doctor.
The machinery to design that protocol and for a developer to design what they need in their asset. And again, not lose this global interoperability is a very tricky thing to get right. And it's not anonymity. I think it's very easy to think about the two extremes. Everybody sees everything or nobody sees anything about it. But in the middle, there's so much nuance and complexity. It's tricky to kind of find something easy enough for someone to work with. But still delivers those much needed features. Right now, things are going incredibly
what he just said
there are some names
important, dude. So what he just said, that last comment, super important. Back it up just a second, because I want to hear that one more time.
But still delivers those much needed features. Right now, things are going incredibly fast. There are some names to work with. Everybody sees everything or nobody sees anything about it. But in the middle, there's so much nuance.
So it's basically, he's a guy who builds blockchain software that is easy for people to work with, easy for people to build on, but also provides, a certain level of privacy if you want it.
Well, and that's a key feature of Canton, because we interviewed Shaul Kafur, and he's going to be coming back on as soon as things calm down, over in the Middle East. But he explained that Canton Network, one of the things that makes it unique is that it's configurable. Its privacy is configurable depending on who's using it. So it can be like totally locked down, everything's private, or it can be configured to where only certain individuals, like say the sender and the receiver, maybe the bank, maybe a regulatory body, something like that, they can make it visible to them, but not to just God and everybody. So it's, privacy is very important, especially when it comes to finance, because it's, part of, being compliant. It's a part of just, banks don't want, and we as people don't want everybody knowing, our bank balances, what we're spending our money on, all that stuff. But sorry, go ahead, David, I cut you off.
No. So for me, look, I'm a Bitcoiner first. So when I see a project like Canton and what they're able to do, at the institutional level, I think that's great. It's an upgrade to digital rails for institutions, and being able to build privacy into that, phenomenal. For me, I prefer to build on top of Bitcoin. And so what he said about, we built something that's easy for people to build on, to use, but also provides that privacy that we need. Well, that's great, because building on Bitcoin and making it private is very, very difficult. So it's not easy to build on. But, for me, I don't think there's any reason for a bank to know that I spent my dollars or my Satoshis at a dock.
On cocaine and hookers.
There should be a certain level of privacy that we expect. But I think that we've all given that away. And now we just expect that there is no such thing as privacy, especially when it comes to our financial transactions. Because, heaven forbid that, you don't report something and then what? You got some crazy bill coming due. So man, I think privacy is super important.
All right. Well, let's tear through these news articles that I got pulled up, and then we'll get over to the lesson for today. So the first headline: oil prices plunged 30% plus. Intraday after Trump signals Iran war wind down. Crude dropped dramatically, the WTI, from peaks near $120 to 84 for Brent after Trump's comments that the conflict is practically over and very far ahead of schedule, reducing immediate supply disruption fears. Next headline, JP Morgan raises U.S. global recession odds to 40% for 2026. JP Morgan increased its recession probability estimate to 40% for 2026, citing high inflation, rising unemployment, trade uncertainties, and Middle East war fallout. This macro warning is trending in crypto discussions as a political headwind. So it looks like you have something you want to pull up.
Oh, I got JP Morgan just pulled up. It's been a while since I've taken a look at any of these bank stocks. But yeah, JP Morgan, looks like the rest of the index stocks for the most part. I mean, it's got some support down here. Maybe a correction, is already halfway through. But JP Morgan, looks pretty decent here as far as the banks go. And then that last headline, Mike, about crude. My goodness, look at that, 120 all the way down today to $82. Big reversal out of WTI crude oil. And it makes sense, right? Because what you were saying, that President Trump mentioned that the major operations are almost done.
Yeah, winding down, and all those buzzwords that makes people more confident that oil is not going to, or the Strait of Hormuz is going to end up being secure here soon, and so that 30% of oil supply isn't going to be getting choked off by Iran is what he's hinting at. If that occurs, who knows? All this volatility is an opportunity if you know how to trade it properly.
Yeah, man. I mean, oil going from what was it, $60, $67 to to 120. That's a lot of volatility.
Yeah, 100%. Yeah,
that's a lot of vol.
Crypto, that's that's pretty common, but in traditional markets, that's not common at all.
It's like the meme coinification of crude oil.
Absolutely. So yeah, just as I'm rattling off these news stories, if you have something you want to pull up, go ahead. So here's the DeFi section. The headline: DeFi Development Corp publishes an agentic AI research, estimates 27 billion to 112 billion of SOL demand from autonomous agents. Those that don't know, Solana is a very big chain for these AI agents. The summary: DFDV released a report, I guess that's the ticker for them, a report estimating agentic AI could drive 27 billion base case to 112 billion bull case in structural SOL demand, implying that Solana price up to $360 in AI-only scenarios. The report breaks down agent transaction data and provides downloadable models. And again, all of these news articles, are all these headlines that I'm mentioning. Once we get the website up and going, I'll be dropping the links to the actual news articles where you can read, deeper into these, and I'll be dropping those in there.
Yeah. So DeFi Development Corp. I'm just taking a look at them real quick. So DFDV, DeFi Development Corp. So you said that this is going to drive. So it's a Solana strategy. Got it. So they're the Solana Treasury. So they've got a Solana Treasury. I feel bad for them. It must be horrible because, look, if we just take a look at Sol, just real quick, I wonder what their cost basis is, So
those that don't know, cost basis is basically their average, their average buy-in.
Yeah. So you want to place bets on what DFDV's cost basis is, Mike? What do you think?
I'm willing to bet that it's at a much higher, price than we are currently at. Just because a lot of these companies were buying SOL at some of the highs, some of the recent highs.
Yeah. So let's see what it says. So does not report a single blended cost basis. Instead, they provide transparency through periodic acquisition announcements. Oh my God. So they won't even tell you what they won't even report it, probably because it's like above $200 or something. So it's estimated that it's between $105 and $115. Wow. Okay. So not that bad. And if we take a look, so they've been buying for a while now. I'm curious to know, they've got 2.22 million SOL, and let's see, what is that worth and how much are they down? What is their treasury, their SOL? What is their SOL treasury worth in dollars? And how much are they down estimated on their holdings? I'm just curious to find out, because, whenever I hear some uber bullish piece of news like, oh, well, it's going to drive $10 quadrillion to Solana.
Bag, they're trying to get people to FOMO in so that it drives the price up so they're not down as bad.
Yeah. So and look, Gemini is totally wrong. Approximate price of $143 per SOL. Oh my goodness. So let's just say that they have 2.2 million tokens. So if they've got 2.2 million tokens, and we just go ahead and bring it on over here to
Solana's at about $88 right now.
Okay, awesome. So let's say 2,200,000 times 89. I'll give them the benefit of the doubt. $89. So it's worth $195 million. Now 2,200,000 times, what was it, 115? So 253. So they're down like a solid like $70 million on their Solana treasury bags. And man, I'll tell you, if I'm right and Solana actually moves from where it is now, completes this bear flag pattern and moves down to like $35 or $30, yeah, they're going to be down a lot more than just 70 million. So they better get out there and start pumping those bags, talking about like, hey, all the money's coming onto Solana. They better hurry up and do that.
Again, like I said, we're gonna report the news, but we're also gonna dissect it. So we're gonna keep it real here, and even on the projects we're bullish on. I always use Arrow as an example. It's David, he keeps me in check. When it comes to Arrow, I'm very bullish on it, but there's some aspects that need to be pointed out so you have a full and complete picture before you invest in some of these projects. It's so let's go into traditional finance. So the FP&A software provider Data Rails declares FP&A software is dead, launches AI finance operating system. A leading FP&A software provider, Data Rails, announced the end of traditional FP&A tools, introducing an AI-powered finance operating system for the AI era. This signals a major industry shift towards AI-driven finance operations.
Oh, I get it. So check this out, because I didn't know what that meant, Mike. So FP&A, financial planning and analysis.
Yes.
Okay, this makes a lot of sense now. So it says designed for finance teams who want to automate their processes without giving up Microsoft Excel. So I don't know why do people use Microsoft Excel? That doesn't make any sense. Like,
it just habit, it's what everyone's familiar with using, and it's the learning curve. A lot of people will probably spend a lot of time, learning all those formulas and all that different stuff. It's just people are just creatures of habit. It's hard to get people to move on to new technologies often.
Yeah, I mean, well, with this tool now and with Cursor, I don't understand why software isn't down by more. Like when I take a look at OpenClaw, and I live in Cursor, you should see my Cursor bill, man. It's crazy. It just makes me think, like, why isn't software, which is you can track here by taking a look at IGV, why isn't software down by even more?
Well,
You know,
and you've pointed out the correlation between Bitcoin and software.
exactly, exactly. Very positively correlated. In fact, we can throw Bitcoin over top of software, and we can see that basically since the April tariff tantrum lows, that Bitcoin, the blue line, and software, the candlestick chart, have been pretty positively correlated. If we were to zoom in to a daily, you might be able to see this correlation a little bit more clearly. So here it is. So this is the blue line is Bitcoin, and the candlestick chart is software. And so I see software today actually starting to reverse after a dead cat bounce.
Mm-hmm.
So that makes me think that this bounce out of Bitcoin is potentially about to give up the ghost, and we might see that next leg down.
Gotcha.
Yeah.
All right. Next headline. BTCC expands into hybrid crypto TradFi model with new TradFi platform. Crypto exchange BTCC is launching a BTCC TradFi to bridge crypto and traditional finance, allowing trading of global assets like gold, forex, commodities, stock, CFDs settled in USDT. This hybrid model blurs boundaries between crypto and TradFi.
So BTCC says that is one of the world's longest running cryptocurrency exchanges, founded in 2011. And it says it started as a pioneer in Bitcoin trading, originally as Bitcoin China, BTC China. It has evolved into a global platform primarily focused on crypto derivatives and RWAs. Okay, so BTCC TradFi cross-market trading feature. Okay, USDT settlement, 500x leverage on some instruments. Oh man. Well, because sometimes, Mike, 100x leverage just doesn't get the job done.
Right? If you're trying to get then you need 500x leverage.
I mean, dude, what is that? Liquidation after like a move of like a couple of basis points against you? That's crazy talk, man.
That'd be real sure about your fucking direction.
Yeah, no kidding. Where is BTCC located, and who owns it? That's what I want to know now, because it said it was BTC China. China. Okay, it's Hong Kong. Okay, great. So it's Chinese, and Dan Liu is, I guess, the CEO. He's the one behind the TradFi to Bridge initiative. And let's see. So these guys are primarily out of Hong Kong, and it's a UK entity, operational hubs in Europe here. And they're focused on European expansion and RWAs, and provide services to clients in 100 countries, part of FinCEN and FinTrack. Okay, so this is like a legit Chinese exchange. So got it.
All right.
China.
Next up, the macro. So U.S. existing home sales rise 1.7% in February, unexpectedly strong. Existing home sales increased 1.7% month over month to a seasonally adjusted annual rate of 4.09 million units in February, exceeding expectations of 3.84 million. Median price rose 0.3% year over year to just shy of $400,000. Inventory is up almost 5% year over year to 1.29 million units. Affordability improved for the 8th straight month. So basically, this is keeping your finger on the pulse, because it is an important data point to kind of understand what's going on with the U.S. economy in this case. Because home sales, I've been seeing a lot of indicators showing that the U.S. housing market is not looking very good. That we are, prices have been kind of overinflated. We're starting to see more people trying to sell their home than buyers, out there, which could, obviously, if there's more supply than there is demand, then people have to start lowering their asking price to move their house, or just take it off the market and sit on it until the markets improve. So these are all things to keep an eye on to be able to paint the full picture. If you're trying to understand what markets are going to be doing, because all of this ties into the stock market, it ties into inflation, it ties into crypto. If people have more expendable income, and everybody's profitable, everybody's making good money, the cost of living is down, all those things, people have more money to spend on risk on assets like crypto. And that's when you see inflows. If things are getting tight or tough, where people are using credit cards to pay for their necessities, not just luxuries, but to pay their groceries, they're going into debt, just trying to survive, they're not going to have expendable income to take risks on things like crypto. So you're going to see a lot of that liquidity flowing out of the market. It's good. You need to understand the full picture so that you can better guess, or have an educated guess on what the markets are going to do and what your assets are going to do price-wise. David, what's your thoughts?
Yeah, I think about interest rates when I see this. And, over the last maybe call it 65, 70 days, rates actually did move sharply lower at one point. Now, there are a lot of, homeowners who locked in mortgage rates below 3%. And those people are not going to be very likely to sell their houses if they've got to go take out a new mortgage, but this time at 6%. So the fact that rates fell a little bit could be part of the reason why we saw home sales tick up. That's just something that I think about there.
All right. Well, let's cut it off there for the news, and let's spend the last 45 minutes talking about some education. Some educational materials. What do you got for us, David?
Edumacation. Okay, so
leer us real good.
I think you want to get some leering, dude. So check this out. So we need to talk about OpenClaw. That's what we need to talk about.
All right.
We need to talk about how we can use OpenClaw maybe to help us in our crypto and DeFi operations. So I created an OpenClaw agent that I call Bob in accounting.
He's a new member of our team.
He is. In fact, we're going to have his ass running everything, because Bob works 24/7. He never complains. He doesn't need food. He doesn't need a break.
Do not take a stapler. Do not take his
but don't take his stapler. So what I really want to learn more about OpenClaw and how you can essentially give your agents hands. So we're over here in the DeFi University school community, totally free to join. And it's just school.com/DeFi University. The first thing that I want to just take a look at just real quick is I want to run through the slide deck here, just so that I can talk through this. So with these cloud LLMs, like when you use ChatGPT on your browser, it doesn't have any of your context. Your context is like your proprietary data. And so it forgets.
You need to paint the picture.
Yeah. And so that's why when you use a local agent, so an agent running on your local machine, or an agent that has access to your data, all of a sudden, and it can modify your file system, dude, it's like having a person living on your computer doing stuff for you in real life.
I want to add, though, be very careful with this, because you're giving root access. Use like a separate laptop, then you do your investing and your personal stuff on. It's very, very important, because you're giving root access to this AI. So there's a lot of people out there that's accidentally giving it access to their wallets, their crypto wallets and stuff like that. And
don't do that.
I want to put that disclaimer in there, because it's important that people understand this is a powerful tool, but when used properly, it's like any tool. It's like a gun can, in the right hands, can save lives. In the wrong hands, it can take innocent lives.
So check it out. This is what you do. This is the power user move. You actually just spin it up in a Docker container. And so that way you can control exactly what permissions it's got. You can control exactly what file structures it can edit. So if you spin it up in a Docker container, then you don't need to use a separate machine. So that's what I've done. And that's what, over the next couple of days, I'll be able to walk everyone through how to use this thing. Because it's basically going to be like Bob in accounting, Mike, is going to be the thing that we talk to run the node. And
we got
I,
Don from accounting.
He
just
got Don from accounting.
he just messaged me. I guess he said he fixed the automated newsletter, so it's in my email. I'll be checking it after the show. But I'm sorry. Go ahead, David.
Yeah, isn't that cool? So Don's an engineer, bro.
He's badass. I love Don.
So
You're saying Bob accounting is going to be running.
Yeah, so Bob in accounting is going to run everything, and we're just going to go back and forth with it over Telegram, and tell it, hey, I want to run the accounting. I want to run the books right now, Bob. And Bob will get back to you in a couple of minutes, and you'll have a full accounting picture. Or you'll say, hey, Bob, I really just want to know about how have our videos performed on a handful of different social media platforms over the last 3 days, because I see that our views went way up. And Bob's going to tell you, hey, this is exactly what happened. Literally anything you can imagine, Bob in accounting is going to get it done for us, man. So,
hell, fuck yeah.
That's right. So the architecture here, this infrastructure, it uses a gateway. So you got to be able to set this shit up. And the way that I've done this is using Cursor. I built the agent. I built OpenClaw in Cursor. Very, very easy. So it's an agentic loop. They call it a persistent agentic loop. And so that's how it's able to get stuff done, because it doesn't stop until it actually completes the task. And it's got memory. So this is really, really cool. It's actually got, it leers, dude.
It leers based off of, like the more that you use it, the more it leers about you.
Yeah, it graduated from the Leering Center, man. It's got persistent memory. So it doesn't forget.
I'll be right back. I'm going to get a refill.
Yeah, and all you've got to do is, give it the soul, the agents, and there's a couple of files that you need to give it. But once you've done that, then you can actually start prompting it just from your cell phone. So the deployment protocol here is very, very straightforward. Number one, you just go into Cursor and you create a prompt in plan mode to have it set up OpenClaw. It's going to immediately find out all of the prereqs that you need. It's going to install them, and then you can, daemonize this thing so that it turns on every time you open your computer. And this is the flow that I followed. And I'm using an M3 MacBook Pro with 24 gigabytes of RAM. And so what that means is I could potentially run this locally, but I don't quite have enough firepower to be able to really do that well. So I'm using a hybrid strategy where I've got local models running on my machine. Plus, I'm actually using the Gemini API, because Gemini 3 is very capable and super, super cheap. And I don't want to pay Anthropic API costs, and I refuse to use OpenAI products. So I'm running local plus Gemini. That's right. So this is super important, man. The security stuff. You've really got to be on the lookout for malicious prompt injection stuff. And so here's something that you can do. You can tell Bob in accounting to do what's called a cron job. So one of the cron jobs that I'm going to have Bob in accounting run is a security analyst, where Bob in accounting every day or maybe twice a day at certain times is going to run a security audit and make sure that there isn't any of this nonsense going on. So very, very cool. And the sandboxing, this is what I'm doing. I'm actually running it in a Docker sandbox. So I could run it from a dedicated macOS user. That would probably be the best idea. But switching back and forth might be a pain in the ass. Although I think it might actually be relatively straightforward to just spin up a new user and then throw Docker into that account and run Claude or run OpenClaw from that sandboxed Docker container in that new macOS user account. That's probably the best way to do it. Okay, so now that we've gone through this slide deck a little bit, I want to play the video content. Let's check this out.
All right, today we're diving into something pretty cool. It's a new kind of AI that goes way, way beyond just chatting. It's called OpenClaw, and the whole idea is to give your personal AI a set of, digital hands
to actually get work done for you right on your own computer. Let's dig in. You know this feeling, right? We've all been there. You ask ChatGPT or Siri for a killer lasagna recipe, and boom, you get one instantly. But then you say, awesome, now order all those ingredients for me. And nothing. It just hits a wall. That's the big limit of most AIs today. They're like these brilliant brains in a jar, but they can't actually do anything in our digital world. And this is where the big shift happens. Look at the difference. On one side, you've got the cloud AI we're all used to. It's all talk, right? It lives on some remote server miles away, and it can't dare touch your personal files. But then you look at a local agent like OpenClaw. This isn't just about talk, it's about talk and action, because it lives right there on your computer. It can organize your desktop, it can actually use your web browser, it can interact with your apps. We're talking about a completely different way of thinking about AI. So yeah, this really is a huge evolution. We're talking about going from a simple chatbot to a real doer, an AI that's an active participant in your digital life. The big idea here is simple, but honestly, it's pretty powerful. It's all about giving your AI hands. Now, obviously not physical hands. We're talking about the ability to execute terminal commands, to manage your files, to click around in your applications just like you would.
Okay, so now we've got to have a little conversation about security best practices here. What does it mean if you've got, a bot with half its brain sticking out of its head going through your files and making real edits in real life?
Yeah.
Well, that means that if this bot loses its mind or something, that you could have real serious real world consequences. So just keep that in mind. It's got to be sandboxed. But at the same time, you want it to have permission to do stuff for you. So you got to sandbox it, but you got to have it running a security agent on itself, like maybe multiple times a day.
This is the missing piece, right? The bridge between the AI understanding your request and it actually doing it. Okay, so how does this whole thing actually work under the hood? Well, it's not magic, it's just a really clever architecture designed for one thing: action. Let's break it down. So, first up, you have something called the gateway. The best way to think about it is like the system's control tower. It's this process that's just always running in the background on your computer, and its main job is just to listen. It hooks into your iMessage or WhatsApp or whatever you use, and as soon as a request from you comes in, the gateway is the first thing that sees it and starts managing the whole process. Okay, so if the gateway is the control tower, then the assistant is the pilot. This is the brain of the operation, the AI model itself. It gets the request from the gateway, and then, using its personality, its skills, and everything it remembers, it decides what to do. It's the part that actually formulates the plan of attack. And this is how it all comes together in what they call the agentic loop. It's pretty cool. So you send a message, right? Something like, summarize my unread emails. Now the AI pilot doesn't just guess. It proposes an action, a specific tool call, like google.gmail.read. Then the gateway, our control tower, actually runs that command securely on your Mac. It gets the results, the email summaries, and sends them right back to the pilot.
Okay, so think about how this agentic loop could be applied to literally anything. It doesn't have to be summarize my unread emails. It can be, tell me about, how much revenue was generated today in this specific sector or this area of my business. Or it could be, maybe take this piece of video content and chop it up and post it on all my socials. Or maybe it could be anything, literally anything. So the prompt will then call a tool. The tool will execute, you'll get some feedback, and then it'll give you a response. So it's actually really straightforward. But the cool thing here is that it's got all of your context that you give it. So it's got your proprietary business or personal information. It's got access to, your Google accounts. It's got access to whatever accesses you give it. It can use. And it can do stuff for you in real life, and it's persistent. So it's not going to just try once and fail and stop. It's going to try, and then it's going to get feedback about the results that it got, and then it's going to keep spinning until it gives you a really good response. So this is super cool, man. This loop is very powerful.
And then the pilot uses that real, fresh info to give you your final answer. It's this constant cycle: think, act, observe, and respond. Now, here's another Huge, huge difference. How this thing remembers stuff. It's not locked away in some mysterious cloud database that you can never see. Nope. It's all right here in plain text files on your own computer. You can literally open them up. There's a soul file that defines its personality, an agents file with its main instructions, and a memory file for your preferences. This means you have complete control and total transparency over exactly what your agent knows.
So this is really, really simple to set up. And you can do this in, the longest task in Cursor was simply waiting for the local models to finish downloading because I got three of them and together they were like, 10 gigabytes or something. So that was the only thing that actually took time. Setting all this up using Cursor, very, very fast. If you've got all of those models downloaded, the actual setup process itself takes maybe 20 or 30 minutes. So it's just deciding like what type of agent do you want to build? You've got to determine because I named mine Bob in accounting, right? So the
Yeah.
node's AI agent is Bob in accounting, and Bob in accounting is a professional crypto options trader. That's all. So it could be anything you want.
Okay, let's talk about the elephant in the room. Giving an AI this much power, I mean, it obviously raises some big questions about privacy and security, right? If it can read your files, what's to stop it from doing something bad? And look, this isn't just some abstract theoretical worry. Security researchers have pointed out a very real scenario. A malicious instruction, maybe hidden in an email, could trick the agent into uploading your private SSH keys to a remote server. The stakes here are incredibly high. And that's exactly why protection has to be baked in from the very beginning. So, what's the solution? Well, the idea isn't to make the AI less powerful. The solution is to build a much, much stronger digital fence around it.
Right. So that's Docker. By putting it in a Docker container and then giving it only specific permissions, the exact permissions that you need it to have, well, that's one way to really mitigate the risk of that prompt injection attack. Another way to do that, though, would be to tell your agent, whatever you name it, I named mine Bob in accounting, tell Bob, hey, I want you to run a security audit on yourself every day at a
Yeah.
specific time. You can do that too.
Let it be powerful, but only inside a very clearly defined, super secure space. And here it is, the number one security strategy. And this is absolutely crucial. You create a completely separate, standard user account on your Mac, just for OpenClaw. You install it there, you run it from there. What this does is it creates a hard permission boundary. It's like a wall. The agent literally can't see your personal files. It has no access to your iCloud data. It is completely walled off in its own little digital room.
So here's the thing. Maybe there are instances where you want your agent to see your personal files. So just think about that. You might want it to have access to your files.
But wait, there's more. On top of that, there's a second layer of defense using Docker. This is what we call true sandboxing. You can set it up so that basically every single command the agent tries to run happens inside its own little temporary, confined virtual box.
Right.
The non-main mode is what's usually recommended. It's kind of the sweet spot. It gives you really strong security for most things without getting in the way of essential system automations.
Right.
All right, so with the serious security stuff handled, let's get to the really fun part. What can this agent actually do? Well, its power comes from its toolkit. This is where ClawHub comes in. And honestly, it's basically an app store for your AI skills. You can just install a skill for Google and bam, suddenly your agent can manage your Gmail and calendar. You install the GitHub skill, it can start reviewing code for you. And with something like the Playwright skill, it can take over your web browser to book flights or fill out those annoying, complex forms automatically.
And so setting all this up, very, very straightforward. All you got to do is hop into your IDE. I use Cursor, hop into Cursor, and then prompt it in plan mode, tell it, hey, now that we've installed OpenClaw, let's go ahead and install some essential skills. And it's going to go ahead and take a look for you, find all the best essential skills, and then you can decide which ones you want to install and move forward from there. Takes just a couple of seconds in Cursor, very easy.
It's wild. But all of this thinking costs money, right? We're talking about API calls. That's where this clever idea of thinking levels comes in. You can actually tell the agent how much brain power to use for any given task. So for something super simple like just reading a file, you'd set it to low. But for debugging some really nasty, complex code, you'd crank that dial all the way up to high. It gives you total control over that balance between performance and how much you're spending.
Okay, so one thing to know about API calls is the model that you call into, they can vary wildly in how much tokens cost. And also the reasoning depth that it's describing here, low, medium, high, adaptive, you really got to set that for yourself. The way that I go about thinking about this is OpenAI products, expensive, but the Anthropic products like, Sonnet and Opus, extremely expensive. But the Gemini stuff, the Google products, I'm going to run with local and Gemini because I can manage everything through my cloud account, my Google Cloud account. So it makes it very, very straightforward. And also, Gemini 3 is pretty cheap when it comes to, like, if I was to compare it to like Sonnet or Opus, much cheaper. So that means that whenever I need to call the Gemini 3 API to get something complex done, I'm not going to be paying through the nose for it. So that makes me much more comfortable to actually use it for everything. If I was to use Opus for everything, it would do a phenomenal job, but it would also cost like, a couple $1,000s a month. So running Gemini, much, much, much cheaper and easier for me to manage.
And this graph really shows you why that control matters so much. AIs think in these things called tokens, and every single token costs a tiny fraction of a cent. So a complex task on a low thinking level might use, say, 800 tokens. But that exact same task, when you crank it up to a high thinking level, could suddenly use 10,000 tokens. It's not a small difference, it's exponentially more expensive. So managing this is absolutely key to using one of these agents without breaking the bank. Which kind of brings us to the big final question, doesn't it? OpenClaws and systems like it are a massive step forward. We're talking about an AI that can be a genuine personal assistant, but at the same time, it concentrates a ton of power and access right onto our personal devices. So, is this the next giant leap for personal computing, or is it opening a door to risks that maybe we're just not ready for? Definitely something to think about.
So I think that, this is the next step, giving these agents hands to be able to do things in real life. I mean, look, this is really an amazing piece of technology here. The ability to run agents locally that can do things for you in real life, big deal, man. It's a real big deal.
Do you mind if
And
I give a quick example, David?
please.
So check this out. DeFi Don fixed the newsletter. So this is the website that once we double and triple check and make sure accuracy and stuff like that. But this is what we've been building.
Dude, doesn't that look fucking great?
Yes, it does. But you can put in what assets you're interested in. So I put Bitcoin, Ethereum, Solana, Aerodrome, Canton Network, Coinbase stock, gold, and silver. And I just hit generate, and it generated and said, here's the snapshot. So here's those assets that I listed, includes the DXY, the Dixie, and NASDAQ, but basically has the price change, the source. So you can double check to make sure it's all accurate. You can click on the next tab. It gives you trading ranges. So it gives the support zone and the resistance zone, the bias, if it's, a bearish leaning, if it's neutral, if it's bullish, gives you, an indication based off data, gives you a little bit of notes on each of those. You can go to the big story, and so it scrubs the internet and social media to find what the big story is that's going on right now in the macro. It goes on X and finds kind of the posts that are trending and what's going on in the markets based off of your inputs. You have your quick hits, and again all this stuff has links to where it got it from, so you can double and triple check it. And then it has our basically our take. Watch list, the next 12 hours. The market's immediate focus remains on geopolitical stability and upcoming U.S. inflation data, which will dictate the Federal Reserve's monetary policy trajectory and significantly influence risk asset appetite. That's what I was talking about with risk on assets like crypto, particularly for Bitcoin and Ethereum. So this is sexy as shit, dude.
Isn't that great? Yeah.
Freaking,
and how long did that take Don to do?
So I did most of it last night, and I was fiddle fucking around because I don't know what I'm doing.
Yeah.
And so I did most of it, but I couldn't get the back end to work. I did the front end. He wasn't able to, he was able to get the back end to work. And I think it took him like maybe
a half hour.
Yeah. I sent it to him like right before we started the show, and he got this done.
Amazing.
So, dude, AI is like such a powerful tool if you learn it and leverage it. So yeah, let's get back to the lesson, because
100%, man. I mean, that
I was able to do a lot of that with no experience, and then I handed it off to Don, who did the heavy lifting, obviously. But but it goes to show what you can get done, and I would say a total of about an hour we were able to put that together, me and Don together.
Just amazing, man. Absolutely amazing. What's capable, what you're capable of now. So we're over here in the school community, just taking a look at OpenClaw. We've got 15 minutes left. And, I want to see if we can scroll down through and maybe find something that we can do with OpenClaw. So check this out. What do you think about using OpenClaw, Mike, to create a Polymarket trading bot? What do you think about that? That could be really, really cool. So we could create a node channel Polymarket trading bot on the 15-minute Bitcoin and ETH markets, because there's a ton of velocity in there. And so I'm thinking that it might be a good idea just to put, Bob in accounting, just task him with creating a Polymarket crypto bot. That would be really, really cool. So I've already put together all of the different strategies for this 15-minute crypto binary prediction markets. There are a bunch of them over on Polymarket, and you can exploit pricing inefficiencies. That's one way. So let me go down through here. There's all sorts of different arbitrage that you can run. One of them is called invariant, where yes plus no must equal 1. If it doesn't, then you can exploit that arbitrage. This is another one, cross-strike monotonicity. So basically, this is telling you that if a further out of the money strike is, the price for that option is higher than a closer to at the money strike, that should never be the case. So you can immediately, sell that expensive option and buy the closer to at the money option, and you make an immediate profit on that. It's called cross-strike monotonicity. And we can run all of these strategies constantly, 24/7, just always searching for opportunities. You can run Black-Scholes probability arbitrage. That's basically you run the Black-Scholes model on a piece of cloud hardware or on a local piece of hardware, and you use the Black-Scholes model to generate probabilities for each of the strikes in those Polymarket options markets. And then you compare what you generate locally with what Polymarket is saying. And when there's a big divergence between that, well, then you run with your model against Polymarket, because Polymarket is just traders. It's individuals, and individuals can be wrong a lot. So you run your Black-Scholes model locally and compare it to what you see on Polymarket. That's called BSM probability arbitrage. You could do some type of an implied volatility strategy, comparing implied vol on Deribit with what you calculate the implied vol to be on Polymarket. That could be an interesting strategy. You could take a look at like the microstructure and flow stuff. Like when you get close to expiry on some of these markets, you get convergence where it has to converge at the where the market becomes final. Yeah. And sometimes within the last 180 seconds, you can get small deviations from the strike, and you can sometimes exploit that. There's order flow imbalance. That's more of like a momentum strategy. I don't really like this one all that much. It could be interesting if you wanted to take a directional bet, because if there's a bunch of people that jump into a market all at once in the same direction and the same strike, well, maybe that's interesting data. I could tell you something. So that's a strategy here. Copula models, not quite. I don't remember what, I need to brush up on my statistics, man. I don't remember what copula means. So I'm assuming that maybe that's some type of correlation strategy, but not exactly sure here. So this is the strategy selection matrix. And so what I propose is that we use Bob in accounting to code up bots that run all of these strategies 24/7, always looking for opportunities on Polymarket. And when Bob sees an opportunity, Bob just makes money off of that shit and deposits it in his own wallet.
I'm willing to put some money in and see if we can have like a channel, a channel account to where, it's just a source of revenue potentially.
Yeah. So Polymarket ARB. Let's take a look at this, man. The crypto bot playbook.
All right. Welcome back. Today, we're cracking open the playbook of a crypto trading bot, one that's built to outsmart human traders on prediction markets. We're going to look at exactly how it thinks, how it trades, and how it finds an edge in this crazy world of high-speed digital finance. Okay, let's just dive right in. So this really brings us to the core question, right? How does a bot, just a piece of code, actually beat a market that's full of incredibly smart, fast, and motivated people? Is it just about being faster, or is it playing a completely different game altogether? Well, the answer is kind of both. The bot really operates on two main principles. First, it looks for pure mathematical certainties. You can think of them as glitches in the market's plumbing. And second,
okay, so the thing about those mathematical certainties is that they can be rare and your edge is very small, meaning like they don't happen all that often and you could expect to make like 1 or 2%.
Yeah.
So yeah, that's not where the big money maker is going to be. It's probably going to, if I had to guess, it would probably be like the Black-Scholes ARB that I think would make some money.
it identifies predictive patterns in the data, making super fast, high probability bets. Let's break down exactly how it pulls that off. Okay, so let's start with the strategies that are basically free money. Seriously, these aren't about predicting the future at all. They're about finding these tiny moments where the market's own rules get temporarily broken and then cashing in on them instantly. The most basic of these is called invariant arbitrage. You know, the easiest way to think about this is that in any simple yes or no market, a yes share plus a no share will always be worth exactly $1 at the very end. This strategy just looks for those fleeting seconds when you can buy both halves for, say, 99 cents, guaranteeing a profit. It's not a bet, it's just pure math. And this is how it works in practice, which is pretty cool. On the left side, if yes plus no adds up to less than $1, like 98 cents, the bot scoops up both, merges them, and instantly gets a full dollar back.
A lot of people made a lot of money early on in like Bitcoin, like even that Sam Bankman-Fried. That's how he initially made all his money, was the arbitrage between the Japanese Bitcoin market and the U.S. Bitcoin market. So basically they were buying at a lower price and selling at a higher price, taking advantage of that difference in price.
Yep. And so this is called invariant arbitrage, where the markets should always equal 1. So the yes shares plus the no shares should always equal $1. If they don't, well, then you've got an opportunity to make literally risk-free money. But notice you don't make that much. You make 2%, so, and this opportunity doesn't come across, super often.
Back. Boom. 2 cents, 0 risk. On the right, if they somehow add up to more than $1, it does the exact opposite. It creates the 2 shares for $1 and sells them for a profit. 0 risk, just an exploit. Next up, we've got another one of these logic puzzles. It's called cross-strike arbitrage. Now, think about this. A market should never, ever price a hard-to-achieve outcome as more likely than an easier one, right? For example, the chances of Bitcoin going above $97,000 can't possibly be higher than the chances of it going above 96,000. It just doesn't make any sense.
Right. So this cross-strike arbitrage is, again, a way to lock in free money. But it's not going to happen all that often. Although on Polymarket, you might see it more often than you might think. And so Polymarket is a giant options market. It's binary options. So when you see, if you're looking in a crypto market, let's say you're in the Bitcoin market, and you see that, well, yeah, basically. And if you see like, the 97K strike trading for more than the 96K strike, well, that should never be the case. So if you sell that 97K strike and buy that 96K strike, you immediately lock in the spread. That's called cross-strike arbitrage.
Okay. Okay.
But sometimes, for a split second, the market gets it wrong. So the second the bot sees this kind of illogical pricing, this is what it does. It instantly sells the overpriced, riskier bet and buys the underpriced, safer one. And here's the beautiful part. It doesn't matter where Bitcoin's price actually ends up. The bot cannot lose money on this trade. It's locked in a guaranteed risk-free profit just by taking advantage of that little moment of market craziness.
Okay, so that was the free money. But the bot doesn't just sit around waiting for glitches to happen. It also tries to actively predict where the price is headed next. So now we're moving away from mathematical certainty and into the world of statistical probability. And this is where things get really fascinating. The first predictive tool in its arsenal is pretty heavy-duty. It uses a Nobel Prize-winning formula from options trading called Black-Scholes-Merton, or BSM for short. Now don't worry about the math, here's the core idea. The bot uses this formula to calculate what it thinks the fair probability of something should be. Then, if the market's actual price is way off from that fair price, the bot jumps in, betting that the market's going to correct itself.
And this strategy really shines under very specific conditions. It works best at the extremes, when an event is either super likely or super unlikely to happen. Why? Well, because that's where our human brains and our gut feelings get a little fuzzy, but the math stays crystal clear. The only other thing it needs is a super fresh, up-to-the-second read on market volatility to make sure its calculations are spot on. All right, next up is order flow imbalance. And this one is all about pure, raw speed. Think of the bot like a seismograph for the market. It's designed to feel the first tiny tremor of a big move. It sees a sudden, massive flood of buy orders or sell orders and immediately places a bet that the price is going to keep moving in that same direction.
So I'm not really the biggest fan of this one, but this is definitely interesting for finding like market signals.
For just the next few seconds, trying to get ahead of the slower humans. And this visual shows you exactly what that tremor looks like to the bot. In a super short time frame, look at that. The buy volume is just completely dwarfing the sell volume. For the bot, that's a massive blinking neon sign that says a wave of buying is coming. Get in now before the price has a chance to fully catch up. And the last predictive play we'll look at is called expiry convergence. This one is all about the clock ticking down. So imagine a market is betting if Bitcoin will be above $70,000 at noon. It's 11:58 a.m. and the price is clearly sitting at 71,000. That yes share should be worth $1, right? The outcome is practically a done deal. But for some reason, it's still trading at 97 cents. The bot sees that gap and jumps right in. And the magic number here, the trigger, is 100 seconds. The moment a market has less than 3 minutes left to live, this strategy kicks into high gear. The bot starts aggressively scanning for these little price dislocations, where the outcome is almost certain, but the price just hasn't quite caught up with reality yet. So those are the strategies the bot is using right now. But in this world, if you're standing still, you're falling behind. The arms race is constant. So let's get a quick glimpse of what's coming next, the real cutting-edge stuff.
A huge one is market making. See, instead of just taking the prices it sees on the screen, the bot becomes the one offering the prices. It'll place both buy and sell orders at the same time, hoping to earn that tiny little difference, the spread, on thousands and thousands of trades. Plus, it can even get paid by the exchange for doing it.
Then you have something that sounds like it's straight out of a sci-fi movie. Sports arbitrage.
Right. So this one's really cool, but you have to get APIs from like other sports books. So there's a couple of them that you can get. There's one really big one in Hong Kong, I think, that I actually got access to. I'm pretty sure it's in Hong Kong. I think I'll don't recall the name of it right now, but you basically got to compare what you see externally to what you see on Polymarket. And when there's a big divergence, then your bot is coded up to take action in some way. Kind of interesting, especially if you like watching sports. I love watching sports, so it could be fun.
This is wild. The bot would literally tap into the official data feed from, say, the NBA. It would see a three-pointer go in a split second before the market's own data feed updates. For that tiny, tiny window, it literally knows the future, trading on information the rest of the market just doesn't have yet. And if you want to see how deep this rabbit hole goes, check this out. Delta neutral farming. This is some high-level stuff. The bot takes a position on the prediction market, and at the exact same moment, it takes an equal and opposite position on a totally different exchange. The result, it doesn't care if the price goes up or down.
I'm really not a fan of this particular trade.
It's perfectly hedged, completely risk neutral. It just sits there collecting tiny bits of profit from fees and other complex market mechanics. Okay, so we've looked at everything from these simple math glitches to incredibly complex hedging strategies. So what's the big takeaway here? What really separates a winning bot from a losing one at the end of the day? And this table really lays it all out beautifully. It's all about trade-offs. You look at something like invariant arbitrage, zero risk, which is great, but you don't find those opportunities very often. Then you've got BSM, which has more risk and it's more complex, but it also has a higher potential return. That expected Sharpe ratio column, that's just a fancy way of asking how much bang are you getting for your buck, or, for the amount of risk you're taking. A killer bot knows how to pick the right strategy for the right moment. So really, the winning formula boils down to these three key things. First, insane speed. We're talking sub-second execution to catch these opportunities. Second, mathematical rigor. You got to trust the models, not your gut. And third, what you could call strategic intelligence, just knowing which tool to pull out of the toolbox for whatever the market is doing right then and there. And all of this kind of leaves us with one last big philosophical question, doesn't it? As these bots get faster and smarter, and the game becomes more about algorithms fighting other algorithms, at what point does it stop being a market as we know it and start becoming something, well, something more like a machine? Definitely something to chew on. Thanks for watching.
Yeah, man. That's the ghost in the machine, Mike. I think it really is. The ghost in the machine.
All right. Well, that perfect timing, 11 o'clock. So real quick, I just want to make sure that I get in the habit of doing this because at the, starting Monday, we are only going to be streaming on YouTube to this one channel. So, please be sure to follow us here at, that's X. At the node _ channel. So, go ahead and look us up, follow us here. We appreciate the support. We're going to keep on, building out all these different channels. So of course we got the node, we got crypto and chill. Join us tonight for that. That will be me and Jeff, just kind of talking about the markets, having a drink, and just relaxing. We got DeFi High starting, probably next Monday. I need to talk to DeFi Don about that. But we're going to be doing entry level DeFi education. What me and David used to do, we're handing off to him. Blockchain report is, I believe Jeff said, I'll be tuning that up. Let me pull that up. He said that will be Mondays, Wednesdays, and Thursdays will be the blockchain report. The Red Pill is on Thursday evenings, and Saturday Night Fever is a DJ set is going to be 6 p.m. Pacific on Saturdays. So all of this you're going to be able to find on the node. So, David, any closing thoughts?
Dude, I can't wait to be able to show to you tomorrow at some point, and to everyone on the call right now, what it looks like to use OpenClaw to basically manage your life. Going to be very, very cool.
Dude, I'm so fucking pumped right now. Between what DeFi Don did with that newsletter, I actually posted that in the Discord for the community to kind of mess with and see if they can break it or see what they can find. Basically beta test it for us. And what you're building out, for the channel, dude, I'm so excited about what we're building. I can't even put it into words. So, and a lot of it, is going to help out the community. All of you out there, that are, a lot of it's going to be, free tools that you're going to have at your disposal to make your investing, better, faster, more profitable. So till next time, we'll see you tonight and tomorrow for this show. Veteran Crypto out.
Peace.